Hello, this is the Pension Confident Podcast. I'm Philippa Lamb. Today we're discussing a hot topic, the bank of mum and dad. Do you help out your adult children with money? For many young people, it is the only way to afford university or get a foot on the property ladder. For others, it may be help with ongoing costs like childcare bills or even being the main source of childcare. But how might relying on the bank of mum and dad affect family relationships? And what could it mean for your own finances, especially when around 1 in 4 British families with children are single-parent households? And what about grandchildren? You might find yourself contributing all over again. Should the bank of mum and dad stay open for business indefinitely?
Children of uni and home-owning parents receive 6 times more than children of renters.
You don't want to encourage complacency to save for themselves as well.
Children of single parents don't want their single parent to mess up their own finances by helping them, and that's a really powerful dynamic in their thinking.
Well, today's guests are here to help us answer that question. Mark Bogard is CEO of the Family Building Society. Hello, Mark.
Hello, really good to be here.
I know you've done a lot of work in this area, a lot of research.
Yes, it's how we set the Family Building Society up 10 years ago. We spoke to families about how they manage their money between the generations. So we spent a lot of time listening to people about this.
Lots of focus groups.
Yeah.
Tim Merriman-Johnson's back with us again, personal finance expert, founder of Mr. MoneyJar. It's nice to see you, Timi. Am I right in thinking you've just qualified as an IFA?
I did. I passed my exams in November.
So you're properly an independent financial advisor?
I'm a proper one.
Joining us from PensionBee podcast regular, Becky O'Connor, Director of Public Affairs. Hello, Becky.
Hello.
The usual disclaimer before we start. Please remember, anything discussed on this podcast should not be regarded as financial advice or legal advice, and when investing, your capital is at risk. To point out what a big story this is, this statistic caught my eye. This is from the Institute for Fiscal Studies, and it says almost a third of young people receive at least one cash transfer. This is during their 20s or early 30s, and it is most commonly from a parent. It's a lot, isn't it? And as far as I can tell from this also, I saw a piece in the Times recently that said 1 in 6 grandparents are regularly supporting kids or grandchildren. Did you get support from your parents?
I have to admit, we did get a little cash injection from my in-laws when we bought our first home because I was 6 months pregnant at the time. Okay. And I think they were worried that we were going to end up renting forever.
Homeless.
So they did give a very timely gift.
Yeah, I mean, that's the Mark. You have children?
So my father nagged me and nagged me and nagged me and nagged me and nagged me to buy a property because it was the best thing I could ever do in my whole life.
Okay.
So in 1988, I bought my first flat with a 100% mortgage from Barclays at 7.25%.
Ow.
18 months later, the flat was worth 80% what I paid for it. And interest rates had gone up to 15.25% because everyone got variable in those days. So my mortgage was now more than my salary.
Oh.
So I spoke to my father because I couldn't afford to eat anymore. Over the next 18 months, he gave me some money each month so I could eat. And then interest rates came back down again. But the really interesting thing in the story, about 2 years later, interest rates had come down, the property market had sort of stabilised. At some family lunch or dinner, my father leant across and said, "Mark, when am I going to get that money back?" And what I thought was a gift to get me out of the problem he'd got me into.
Right.
And it's a really important point because one of the things we see is that intra-family money exchanges, one side thinks it's a gift, the other side doesn't. All of these things, people have huge misunderstandings. So I gave him the money back.
Interesting.
So,
we are definitely going to get into that because I think you're absolutely right. The kind of lack of clarity around, is this money given? Is it a gift? Am I expecting it back? But Timi, have you benefited from this yourself, from your parents? Have they helped you out?
No, I can't say that I have. My parents provided a lot to me in terms of, my upbringing and education, but I found myself in a position where I'm transferring money to parents and grandparents. So I'm of the generation that's more likely to help out.
Ah, so you're paying back. Yeah. Okay. Yeah, it's interesting. But the point you make is a good one because I think my parents would have said the same, that, they gave us a great upbringing. And then when we were launched as adults, we were on our own. But I am wondering, I'm a parent myself. You're a parent. You've got kids. Morally, is there a moral question here? Should we be helping them out? Should they be standing on their own feet?
Assuming that you can, then I think a fairly tempered approach to giving is overall a good one, because I think you can actually sometimes do more harm than good if you're too generous, because that can then be very demotivating for them in terms of finding their own way in life. But clearly, there are some big structural problems, particularly in the housing market, that are creating barriers for people, living the life that previous generations kind of took for granted. And so, of course, naturally you want to do what you can to help.
So if we start at the beginning, when do we feel you should even start thinking about your children's future financial needs? Because I think most parents know at some stage, obviously there's the cost of bringing them up, but you kind of know that if they go off to university or potentially think about buying property, you're probably going to be helping. So when do you start?
There's certainly a lot of interest for the people that follow me around saving as early as possible so that they can benefit from the compounding going forwards. Where people are unsure is whether they should save it into the junior SIP or junior ISA environment or use their own one, or whether they should even let their children know that the money is being saved.
But just thinking about the beginning of this, have you got junior ISAs for your children?
Yes, yeah. So I don't really consider those junior ISAs a deposit fund. I consider those probably more likely to go on cars or university costs or something like that, something a bit more short term. But in terms of other savings for them, I think it's probably, a good idea to use your own ISA if you're worried about how they might spend it before they really need it, if the purpose is a house deposit.
They don't necessarily need to know, do they, if you're saving? Might be quite helpful not in some ways.
I think it's probably a good idea to hold back a little bit, just because, again, it's that you don't want to encourage complacency to save for themselves as well, and they might think they don't need, if you're saving for them, they might think, well, I don't need to worry, then I'm fine.
Yeah, it should be an add-on, shouldn't it, not an instead.
Yeah.
And also, we're making the assumption people can afford to do this at all, because obviously not all households have any spare cash at all to save along these lines. So there's a clear divide, isn't there, between the haves and the have-nots.
Well, that's a key part in what you're saying. I think a third of households have less than £100 saved up.
I think often parents, that their own wealth is actually in their own property. So it might be that they don't have any savings. And so that might be that their main store of wealth.
And they're living in their investment.
And so they're living in their investment. And often, that's actually the pension as well. So I think sometimes people do look to what they can do with their own property, sell it. That often does happen when people are thinking about helping out their kids too.
To give a bit more of a flavour to the divide, if I may, when I was reading about a report also from the IFS called Who Gives Wealth Transfers to Whom and When, and I found that these statistics quite interesting. So children of uni and home-owning parents receive 6 times more than children of renters. White young adults are 3 times more likely to receive gifts than Pakistani or Bangladeshi recipients. That was what was said in the report. As someone of African heritage, I can also anecdotally corroborate the same for someone from my background. But also wealthier recipients were more likely to use gifts for marriage, for university, whereas the poorer households were more likely to use the gifts to pay off debts or to buy a new car.
Yeah, really interesting. I think the first withdrawal for most people from the bank of mum and dad, if there is one at all, it comes in early adulthood, doesn't it? We've got, I think it's about 35% of kids go on to university. Obviously, not all of them do, but it's a big number. Others may be training or starting the world of work, but on a very low salary. So that phase when we're kind of helping kids to get job ready and they're cash poor, I wonder whether people realise just how much they might need to help out at that stage. I was surprised when my son went to university just how much money was involved in that for me.
I think you have your own frame of reference based on your circumstances when you were that age, and obviously things have changed a huge amount in terms of financial demands quite early into adult life. In reality, if you're going to help with those things in a meaningful way, that does require, and assuming you've got the means, it does require quite a lot of planning in advance because they are steep, particularly if you've got more than one child.
Maintenance loans are really, really low. Rents are really high. It's a lot of money if you're able to help out. It's interesting. And of course, it can go on and on because my generation, we largely did, if we went and did a degree, it was a 3 or potentially possibly a 4-year degree. Now it's masters, isn't it? 25% of young people doing a master's degree now. So we're not necessarily talking about 3 years, could be 5. could even be 6. Should kids work when they're at university? I did. I worked right through.
I did. I've
Yeah,
been working
you did.
since I was 14.
Me too.
It's depressing.
Paper round, Becky. But yeah, I mean, there's that, isn't there? I know some people don't like the idea of their kids working when they're students. They think it might, depress their grades.
You get long holidays. I mean, I did some very funny holiday jobs, but there was one in particular I ended up doing, which was market research, ringing people up and asking them questions. If I worked from 9 a.m. till 9 p.m, I got paid 30 quid. And in those days, you could go on holiday in the south of France for £10 a day. So every day...
Those were the days.
Every day I did at Market Investigations Limited was 3 days in a tent in the south of France.
I fully support kids working where they can. My youngest brother's 18, and he did last year at a fast food restaurant, and he managed to save up £1,000 over that period. And for that reason, he's really responsible with money.
I'm thinking you've been a good influence on him, Timi.
I'd like to think that I have been.
Hi, it's me, Philippa, just interrupting briefly to remind you to click on that subscribe button so you never miss an episode of the Pension Confident podcast. Remember to share, rate and review too, and now I'll leave you to enjoy the rest of this month's conversation. Happy listening. So if we think about what happens next in young people's lives, and we think about, they're through university, back in the day, it was get a job, move out. Now, definitely not. I mean, most people are heading home again, aren't they, after university, because rents are so high. Maybe they haven't yet got a job. I think we've got a huge proportion, share of 20 to 24-year-olds living with their parents rose to over half in England and Wales. This is between 2011 and 2021. The boomerang generation, this is the Office of National Statistics. So this is pretty much the norm now, isn't it? Should you charge them rent?
Perhaps if it's over an extended period of time, but equally you could suggest incentives to save so that, we could charge you rent, but if you save that money instead, then fine. But it would have to be on the strict condition that money was saved and didn't get blown. And that would be a very tricky thing to monitor.
It would. How do you police that? I mean, that's difficult. I don't know. What do you think?
Again, coming from my background, the expectation was always that I would pay rent. And it didn't need to be a huge amount, but it would be enough to help out with the bills and with food and stuff. But I think if parents are in a position where they can let their children stay for free, then they should.
It's better, isn't it? Because rents are record highs. We talked about this on the podcast on other occasions. They are ridiculously high, huge proportion of your take-home pay. So in many ways, you might as well have them stashing the cash. Because if you're thinking as a savvy parent, the more they save now, the less you're likely to have to help out later.
Yeah, but of course it doesn't always. I mean, if you want a job in London and your parents don't live in London, for example, then that's not feasible. So
remote working's changing that in a big way, isn't it?
That's true, yeah. But I think there's always going to be some compromise along the way, and actually, living with your parents for a long time after you're an adult is difficult in many ways, isn't it? So I think if you can keep it as a short-term arrangement, that suits everybody with a fixed financial goal in mind. But yeah, the rent saving is huge. Yeah, if you can do it, then why not?
And obviously, you talked about buying a property as a young person. This is a lot of people's aspiration. I think the average first-time buyer, what is it? Is it 35 now? It's remarkably older than it used to be.
The thing that we learnt in talking to the people who are 25 to 30, they all hate renting because of the people they perceive as being like the landlord. And to move out, almost everyone has to club together, even if you get help from your parents. So they do it with siblings, they do it with friends. It's not a thing you did on your own anymore. You have to plan. And the final thing is that children of single parents don't want their single parent to mess up their own finances by helping them. And that's a really powerful dynamic in their thinking.
It's really interesting you say that. That has been my personal experience. I'm a single parent. And yeah, I think when kids see you bring them up alone, I think there is something in that sense of, they understand the work you put in, they don't understand where the money comes from. And yeah, I think they do perhaps have more of a sense of responsibility. It's fascinating your data supports it. But if you do decide you're going to help out with cash for a flat deposit, some thoughts around how to do that. Legal advice, tax advice, lump sum from your pension. I mean, I don't know, pros and cons.
Well, I mean, on the pension point, if you're accessing your own lump sum to give to your children, obviously you have to make sure that that is not going to affect your retirement and that you've really done your sums and you've worked out what your costs may be that you don't know about. As you were saying, you don't know if you've got care costs, you don't know what's around the corner for yourself. So that's a really big decision not to be taken lightly and not to be taken too soon either, because, if you can access that money at 55, doesn't mean that you should. And unfortunately, very often that need for a house deposit from the children comes around the same time that lump sum is accessible to the parents, so it can be quite a temptation.
So the whole thing is so complicated, but coming back to the point you made, the single biggest variable for parents and grandparents is their own financial situation. So most people who aren't in the position where they can give large amounts of money or buy their kids a flat, they're worried about their own financial circumstances. They don't know whether they're going to live to be 70, 80, 90 or 100. There are lots of other ways to help which don't involve giving money or giving money in a way you can get it back, because you think, if I live to be 95, I'm not giving you the money because I'm going to need it. And that's a really important factor for people because of the issue of I don't know how long I'm going to live and how much money I need. So gifting is one option. There are lots of other options which we see parents tend to prefer. So there's a mortgage called joint borrower sole proprietor, where effectively a parent or parents go on the mortgage with the child. The child is expected to pay the mortgage, but because of the parents there, it may increase the amount they can borrow or, reduce the interest rate. Parents can provide security either by way of cash or using the equity in their own home. So there are lots of ways that parents can help without actually giving money, and those people tend to be more inclined to do that because it keeps their options open. Because generally, once you give money to a child, even if you kind of think, look, I may want that back in 20 years' time, it's kind of gone.
The only thing that I'd add is for parents who maybe have smaller amounts to give, smaller amounts given over time could also help too. The Lifetime ISA has a £4,000 per tax year allowance, and any amounts put into that would get the 25% government bonus. And so you can give as you go. Doesn't always have to be a lump sum.
What about big cash gifts that, to be brutal, aren't strictly necessary? We all love weddings. Weddings are lovely. They are so expensive. And this is a time, isn't it, when a lot of parents feel that they really do need or want and need to kind of help their kids out with this, crucially important day. If parents either foot the bill or make a big contribution, do we think that gives them a say in how lavish the wedding should be?
Say so.
Or do you just have to pay up and be quiet?
It's nice to have a day that everyone can remember for sure, but if the purse strings are tight, then can you have that special day without spending a huge wodge unnecessarily? Then yes, I think you can.
We've alluded to kind of open-ended bankrolling a little bit earlier on, but that strikes me as something that would be worth talking about, because if we can't hand over cash, we can hand over time. So, that can be things like childcare, which, there's a cost attached to that, isn't there? It might be time that you would otherwise be working and earning. But if you are helping out with things like childcare costs or car payments, how do you approach that? Because the question you've raised this, we've all raised this, your own financial resilience going forward is a completely intangible number, isn't it? And as you say, it could be when you're in your 50s, when you get access to pension lump sums, but you don't know how long you're going to live. You don't know what costs you might have, even if you own your own home, around elder care costs or care home costs, all those things. So what is the good way to do this? And is that a point actually when you need to have proper conversations with your grown-up children about how long the support is going to go on for and how much it's going to be?
I think the cost of self-sacrifice does need to be quantified. Again, thinking of my own circumstances, my in-laws have helped us out hugely over the years and saved us thousands of pounds in childcare costs. And we have also had to pay for nurseries and childminders and what have you as well. But they've done, maybe 2 days a week.
Have they?
For 10 years.
Wow.
And now they pick the boys up from school. And so we don't have the after-school care costs for the one in primary school anymore. So if you add all that up, that's worth way more than a deposit. It happened at a time in their life when they were wanting to go part-time anyway. But I think, it's a big decision for grandparents to give up their own incomes to support the younger generation. You just have to make sure that you are still earning enough to pay into a pension so that, you can eventually give up work. And again, it comes back to that point of, not giving up too much for yourself.
Yeah.
When it comes to the topic of finance and of helping yourself versus helping others, I like to adopt the oxygen mask principle. So
Help yourself first.
on planes, they'll even say to mums that you should fit your own oxygen mask before your babies, because the recognition there is that if you cannot help yourself, then you won't be in a position to help them. It's good to give and it's good to want to give, but you need to make sure that you look after yourself first.
So it's being aware of societal pressure, isn't it? And your own, obviously natural longing to make sure your kids are okay. But yeah, as you say, perhaps the most useful thing you can do is make sure you're going to be okay, because it does strike me that if you run into financial difficulties in later life,
You can't help anyone.
you can't help anyone, and your adult children are unlikely to be able to help you out, because they will be just in that place where they've got all the expensive kids and maybe university or helping their own kids out with flat deposits. So there's no buffer for older people, is there, at that point? No cash buffer, no one to look after
Generally,
them.
there isn't, but it's interesting when you start. So the joint mortgage sole proprietor that you talk about, sometimes we see kids helping their parents in that way.
Do you?
So you do, but it's a much lower number than the other way around. The other thing you haven't mentioned, which is really is difficult for people, is do you treat all your kids equally or
yes.
according to their needs and their competencies?
Very good point.
Some kids are good with money, some kids are lousy with money.
Some people are earning more.
Some people earn more, some people earn less. If you're grandparents and you've got 2 or 3 kids and they have different numbers of kids themselves, do you treat the grandkids equally, or do you treat each of your children equally? And so some grandkids get more. Parents and grandparents really torture themselves with that question because it's really hard to answer.
What's the rational response?
To treat them equitably.
Yes.
Yes. Good word. Yeah, according to need.
Yeah.
Yeah.
Well, just if there is a certain pot and, it's £90,000 and you've got 3 kids, then they get £30,000 each.
Regardless of how much they're earning?
I think so, because if you're a higher earner and, you've made that choice and you've worked very hard, then...
Oh, but Becky, some really worthwhile jobs pay really badly. I think Timi's definition of equity and is different there, isn't it? I think you're talking about actual need rather than just dividing things along equal proportions. That's what you meant, wasn't it?
Yeah, I think if different children are being, like one child's being responsible and the other's not being responsible, then to continue throwing money at the irresponsible child is unfair. But if one child has
hard to let them sink.
But if one child has a job as like an investment banker and the other's a nurse, then they're going to have different financial needs. That latter job is really important, but we don't have a financial system that's worked out a way to compensate it adequately. That's where behaving in an equitable fashion makes more sense.
But what you're saying about siblings, or just generally feeling that they haven't been treated fairly, that they've done everything they should do and there's no money and it damages sibling relationships or damages parent-child relationships, I think that's a really interesting point, because the whole sense of parents continuing to pay, and obviously this assisting with childcare and stuff, this can go on, while your kids are into their 40s, this rolls on and on and on. I am thinking that what we should be suggesting to people is they do sit down and have proper conversations and maybe document them about this, about when this stops and how they're making their decisions. Because otherwise, there's a real opportunity, isn't there, for fracturing families around money?
People find it so hard to talk about. So we because we do joint proprietor sole owner mortgages, we had one relatively recently, a son and his father. So the father was going on the mortgage to help his son get the mortgage. Really unusually, the first mortgage payment was missed. So we rang up the son. So he said, no, my father's going to pay it. So he rang his father up and said, look, your son says you're going to pay this mortgage? So he goes, no, I'm not. It's absolutely clear the son's going to pay it.
So what happened at that point? Did anyone pay it?
The son ended up paying. But it just shows you that even something as fundamental as who's going to pay the mortgage in the first month, people find hard to talk about.
I mean, this is a thing we talk about in the podcast all the time, the kind of immense value there is in having open conversations.
And also writing stuff down,
Yes.
A one-pager.
And sharing that document.
An email, just so that everyone's on the same page about what's happening.
Yeah.
There are huge generational difficulties here, though. There are. I will happily talk about money all day long, but the further up the generations in the family you go, the harder that goes.
I've got another key question. We're going to have to wrap this up soon, but I do want to talk about this. Should you give money, if you're going to pass it on, should you give it while you're alive? Or what about just leaving it in your will in the traditional way? I mean, that's what people used to do. Obviously, there's tax implications here, aren't there?
I think the tax implications are well worth thinking about there. But
Run us
also,
through it, Becky. How does that work?
Inheritance tax is the biggie. And if you leave it to when you die, then your estate is potentially liable for inheritance tax, depending on what you're leaving and what assets and how much. That is something that would come from your estate, so it would affect your beneficiaries. So one way that you can try and help them more generously is to help avoid that tax.
Yes.
And so giving earlier on, there's a gifting regime set up. So gifts prior to 7 years before your death are tax favourable. And then there's a taper system for gifts up until that point. And then there are some gifts that you can make that are just tax-free as well.
Yes, repeated small gifts. Is it
£250?
Thank you, Timi.
Yeah.
You can just keep on giving those, can't you? As often as you like.
I think it's ongoing. Yeah.
Yeah.
So these are all things worth thinking about. Unfortunately, there is still probably a predisposition to leave it later, but giving earlier can certainly make a lot of financial sense for everyone.
But you do need to do this thing we talked about of ring fencing enough for your own
Yourself.
unexpected future, whatever that might be, don't you?
And expected future, yeah.
And it's very hard to actually put a number on that, isn't it? About how much. I mean, there's lots of bands about how much we're going to need when we're older to live, but there's all sorts of unexpected stuff around, particularly care costs.
Most people don't retire with enough in their pension to support a moderate living standard. The Pensions and Lifetime Savings Association amount. The average retirement pot is just over £100,000 when people reach their mid-60s, which is unfortunately not going to go that far on top of the state pension. So so most people are already retiring, assuming the pensioners are only pot, with less than they need. That's important to bear in mind. It might feel like a lot when you first access it, but got to last a long time.
So given we know that, are we effectively saying you really, really should be thinking about yourself first, as Timi says, before you consider at all assisting your kids or grandchildren financially?
I think so, but I think, there are obvious solutions where you can kind of do a little bit of
You
both.
don't have to give money away. The one other thing which I've seen, there is a cadre of people just think that they've got to keep it whole because otherwise sort of water's draining out the bucket and it's going to be empty soon. There are different segments of people. There are the people who spend too much, but equally there are people who are just too cautious.
Yeah, and if you give whilst you're still alive, then you can actually see the benefits of the money that you're giving and experience it with your children and grandchildren, which I think is a much more beautiful outcome than sort of you die and then you don't even know what happens.
Yeah, absolutely. And I think we do need to wrap this up now, but it strikes me the big lesson here is about managing expectations. Talk to your children about money. We say it again and again on the podcast, don't we? Thank you all very much indeed.
Thank you.
Helping our kids to flourish, I mean, it is what it's all about for parents, isn't it? But every family, with or without kids, needs good conversations about money. So we do hope that today's discussion might help you get one of those going in your family. Join us next month. We'll be discussing how to balance where you put your hard-earned cash. If you enjoyed this episode, please do give us a rate and review. We'd love to hear what you think. Don't forget you can watch us on YouTube, and if you're a PensionBee customer, you can listen to all the episodes in the PensionBee app. Just before we go, a last reminder, anything we've discussed in this podcast shouldn't be regarded as financial or legal advice, and when investing, your capital is at risk. Thanks for being with us.